Woo-wee, baby. I think we are live, and I'm feeling great today. Ladies and gentlemen, what is going on? My name is David Worrell. We do stock speculation here. You better believe it. We have so much to go over, but before we do, let me mute myself because I know it's going to pop up any second. Before we get the show started, I'll tell you this, guys. I'll tell you this right now. What a doozy of a week. What a doozy of a month. What a great start to our year, though. So depending on where you are at in the market. But remember, at 9 o'clock, we're going to get this party started. We have interest rates we're going to go over, see if anything changed there. Of course, we have earnings. Earnings are still on the table. It is a plethora of earnings still out there that could still change the way this market goes. Also, we have Sector Watch. Rather than everybody so focused on the watch list and what we need to watch for tomorrow and which stocks to play, right now is a very critical time to watch the pullback and see what sectors are gaining those rotations. As you can see, the fiery flame behind me, we're going to see what is holding up the best. And then, of course, we will go over the old watch list. As you guys know and love, don't worry, we still have a watch list. And then, because it was so popular, that can slim using AI, we're also going to go over a few biotech stocks using AI under the can slim method. And then, of course, we added the burn metrics thanks to you. Shout out to Daniel Bob of the Dan, who says chop suey. Hello, everyone. Jimmy Bright Yosef's in the building as well. And if you are here too, make sure you hit that like and subscribe. If you're watching at a later time and at any point in this video you learn something or appreciate something I said, or I am just pure bliss to your beautiful ears, please hit that like and that subscribe button so we can get out to more viewers just like you. What time is it? We got about 30 seconds and we are going to start the damn thing. So I hope you guys are having an awesome day. What's up, No E? Looks choppy, says he, the SPY, and that is what you need to vote on. Will the SPY market rebound, or are we in for more chop? I don't know if you guys played Fruit Ninja, but that's the way the SPY is looking now. Carl Burr is in the building. What's going on, brother? Vote. Will the SPY market rebound, or are we in for more chop? 0% so far say the SPY will rebound from this pullback. 29% are saying we are heading lower, red, red, red. 38% say more sideways choppy action, and 25% say new higher lows hold. Then we good, homie, we good. What up, Daniel Bob? He says, are you doing NVIDIA earning Wednesday? Actually, maybe that is something we should do. I think NVIDIA has been a staple product in our beautiful journey on this YouTube channel, and I think Wednesday we absolutely should. What up, Smaid? What's going on, brother? I think you guys already know it's time. Let's get this ball rolling because I have an amazing show for you guys today. Interest rates, earnings, sector watch, watch list, and of course, we're going to dive in deep on how to use the AI using the can slim method. Let's do this, baby. Now, if you guys didn't already know, I love can slim. I am a swing trader, mostly focused on that momentum, the trend and base breakouts. If you guys want to learn how to do that, make sure you hit that like and that subscribe. And then, of course, in the trading school, we have all those different avenues to learn how to trade exactly how we do in this section. Now, the first thing that we're going to do, we're going to talk about interest rates, guys, because we want to see if there has been any changes in those interest rates. So why don't we dive down? We're only going to spend a quick 5 or 6 minutes on interest rates. So let's see what old Jerome Papa Powell has going on for us. Interest rates with Jerome Powell.
Oh, yeah.
All right, so with the interest rates, guys, we know that we haven't seen much of a change, but of course, with the economic calendar and the change of events, we might see something a little different. Now, March, it is still looking March. When we have the meeting on the 19th, we are looking at a rate stay. We are currently in between 4.25 and 4.5, and you can see that 97.5% likely to have a stay. Now, we know June and July is when we started to get those cuts, the foreseeable cuts, because May we're still around that 71%. What up, Loke Dr. Fell? What's going on, brother? It's good to see you. What's up, group? He says. Give him a shout out. Now, here's June. So June 25th is when we start to see that quarter of a rate cut. So that is looking very promising, because if you remember, just about 3 weeks ago, we were looking at this and it wasn't until July looked like there was a probable ideal quarter of a rate cut. So now it is looking more like June. We have a 46% chance to cut a quarter of a point, which tells me that now it is much, much higher than actually staying. We are more likely to have a cut now in June than we were at any other previous time. So it shows that a cut is more likely to come. And then, of course, in July, we are much more likely to be in that scenario with a higher rate cut soon to come. So we're looking somewhere around June, but if we jump all the way to December to see where we are at on the rate cuts, you can see we're looking at about the probability of being down about a half a point by the end of the year. So we're looking at 2 rate cuts now, where 2 weeks ago when we were doing this meeting and we looked at this, we were only looking at 1 rate cut. So it actually looks like we are increasing the probability of actually getting a rate cut, and it might be because of the pullback or because of the most recent news in the economic calendar. Zamora's in the building. Norman Conklin, one of our members, is here. What's going on, Norman? I'm pumped to have you here. And look at that, the green name with the star next to it. It looks good. It looks real good. What up, Halen Nugenian? I'm sorry if I'm not saying it right. I hope I can. But yeah, guys, so it's looking like this year we are now looking at 2 quarter of a basis point cuts. So a total of a half a point by the end of the year, which is a little bit higher now than 2-3 weeks ago when we first started looking at this, okay? So that is your interest rates with Papa Powell.
Interest rates with Jerome Powell.
Oh, yeah.
All right, let us move on to the earnings. Now, of course, I use Earnings Whisper. It's really, really simple. You just go to Earnings Whisper on Twitter, or also known as X. And if you check it out, you will see in front of us we have a nice group of earnings. We have a little bit of everything in here. You got Pizza Hut, DPZ. You got Riot, Hims and Hers. You have Cliffs, Cleveland Cliffs, Zoom, Diamondback. Monday after the close is looking pretty well set. We have Summit. If you guys remember, we've been following Summit Therapeutics for quite some time, SMMT. Actually, the chart actually looks kind of interesting to me, but because it's been chopping sideways for so long, it's kind of like, what's going to happen here? Kind of bored with it. What up, Sohal? It's good to see you. Halen Nugeni. No, I'm just glad to be here. We are happy you are here too. We already got 20 of you in the room. Hit that like, hit that subscribe button. I won't overdo it. I will not overdo it. Just do the damn thing. Hit that like, hit that subscribe button. We have an awesome show for you. And of course, now look at Tuesday and Wednesday. This is where it starts to get really interesting. AXON, we've been following AXON for quite some time. That is a good mover. Of course, Kava, you guys know I have been an advocate of Kava ever since I went to New York. And I actually seen Kava, didn't eat it Kava, but seen it first and foremost, that it was very interesting. Lemonade, Wednesday, workday, sorry, I call it Wednesday, WDAY, ticker symbol, Intuit, Kruger, whatever, Planet Fitness, Home Depot. And then on Wednesday, we have NVIDIA. NVIDIA after the close, we will most likely be running that. So we'll see how that works out for us. We're going to do NVIDIA earnings and they've always been a banger on this show. Then we have C3AI. I haven't checked out C3AI's ticker in a little while. That's ticker symbol AI. We can take a look at that. Salesforce is coming up too. IONQ, if you guys remember, that was one of the leaders when we had the quantum computing. Also, Root, you guys know Root. If you guys have been a part of this channel, I've been calling out Root, talking about that yearly base breakout. We finally got it, and there it goes without me. And then had a beautiful cup with no handle, another breakout that I missed. But you know what? It's A-okay. I'll cry about it later. My wife can sing me to sleep. We also have Dell and SoundHound. I know you guys know Dell and SoundHound. You guys have been talking and looking at SoundHound and Dell especially. Archer as well. You guys, this has been a big favorite in our Discord as Archer. That's coming up on Thursday after the close. That should be a very interesting one, as well as it is a big speculator. And then Friday we have Fubo. I know Dan was watching Fubo for a while after Disney got their news through Fubo, either working partnership, bought up, something like that. But let me know in the comment section, guys. If you're awake, let me know. What are you excited for? You guys know I do not play earnings. I play after the earnings. If we get a big catalyst on a double beat, a double whammy on the earnings per share and the earnings, the quarterly earnings, then you know I'm going to be more interested on an earnings continuation play. So that is what I am there for. Let me know what you guys are willing, and obviously we're all going to be watching the video on Wednesday after the close. But what else are you guys watching? Let me know right there. Look at the sea of red. It's disgusting, and that's why we have to pick apart the sector, okay? And one tool that we use when we're picking apart the sector is this Spider Select Sector. You guys can get this at sectorspiders.com. It's very simple. It's very free. That's one of the things that you can use to your own advantage. What I do is I scroll down here and I click View Full Sector. When you click on that, you can see at the top here, you have 1 day, 5 day, 1 month, 3 month, 6 month, year to date, 1 year, 5 year. Now, what I like to do, since we are still fresh on a new year starting January, we can just do year to date, and we can see right here what is leading in the sectors. And you can see communication services is still an absolute banger at 6.41%. And it looks like in second place is healthcare. Now, we did talk about healthcare, and we've been talking about communication services, but healthcare continues to show strength. We also have utilities and consumer staples up there, but so far this year to date has been very good. The consumer discretionary has not been so hot, but you can see with Meta ripping up and completely decimating its competitors, communication services has been doing really well. Energy did have a very nice bounce off the lows, and I'm very curious to see if it will continue to bounce. We all are very aware of financials absolutely kicking ass these last few quarters as they continue to rack up that money, y'all. And then, of course, just behind it is utilities. As you guys know, sometimes, not sometimes, but when we start to cut those interest rates, utilities get freed open for their expenditures to expand. And when they do expand, they take on a lot of those higher interest rates. So when interest rates are high, they're spending a lot of money. They have a lot of money that's locked up. As interest rates start to come down, utilities start to earn more money. So that is our sector watch. Now we are going to dive a little deeper into it as you're going to see the past few weeks. And you can see here in our 1 month, just this last month, you can see communication services and consumer staples have really done a number. The last 5 days, consumer staples and energy, and then of course our last trading day. The only thing that held up in this damn sea of red is going to be consumer staples. And you normally see this when people run to defense. When they're playing defense, you're going to see them running consumer staples. Why? Because where else am I going to put my money? I'm going to put it in food. I'm going to put it in things that people need. So consumer staples and usually energy, but you can see consumer staples beat. All right. So we have done the interest rates, and in 11 minutes, not only have we done the interest rates, but we went over the ETFs. The thing is we need to go a little deeper. We need to go a little deeper into the sector ETFs because I want everyone to know and understand kind of where I sit and where I feel on this. So now, first, we're going to start with the S&P 500. I think it's very important because this is our benchmark. It's my benchmark personally, and it's a lot of hedge funds' benchmark as well. They are trying to beat the S&P 500, and on average, it is usually 11% a year. So if you can't beat the 11% that this makes every year, swing trading, day trading, scalping, whatever you disgusting people out there do, then you're just going to want to buy the VOO. You're going to want to buy the S&P 500. And you can do that. And I have been doing that because it is the best way to ensure gains. And so that is what I have done. Now, of course, I'm not a financial advisor, so don't take any recommendations from me. But this is what the general population would use. An average ETF that follows the S&P 500 that pays a dividend. This is what I use, and that's the VOO. Now, the S&P 500 is squatting down right now, not only on its 50-day moving average, but a very important area of 600. It's not only a psychological area, but it's also a technical area. As you can see, it is its previous new higher low. And as you guys know, I like to find equilibrium, whether you're a bear or whether you are a bull. You want to know where the S&P 500 stands in this specific situation. For me personally, if we break below 600 and break below this 598, I think we can see ourselves pulling all the way back before we find support down here at 590. Now, that is just my opinion. I've been watching technical analysis for quite some time. I would love to see it hold. If we can hold above this and say, hey, look, this is a double bottom or a new higher low in this situation, we are still bearing on this, on this basing breakout. So there's positives to this. We have broke above it once. We held new higher lows. We broke above it again. Can we hold another new higher low? Because that is showing that we can get above it. The fact that we do get up above it is a very positive and encouraging sign. But when we get up above it and we head right back down and break right through and we start right back over after 5 days, a whole week's worth of gains are given back in one day, it's very diminishing. It's very deflating to the traders. A lot of people are having a lot of hard times right now trusting this market. With fear comes opportunity. And when we say fear, we think VIX. VIX volatility index is up. What I can say is every time it's popped up, it came slamming back down. This stayed up by the end of the day, which has me a little concerned. So with that concern, I always stay positive, folks. We need to know, where do we stand? So if we zoom out on the weekly time frame for the S&P 500, you can clearly see we are still trending up. We are still trending up. We are still right in the middle of these regression lines. We could very, very normally come down to 590 before I would really be heartfelt, okay? At this point in time, I am cautious because we are not breaking out of this basing area and heading up to the top of this regression line. Rather yet, we are more trading sideways in a more choppy action until we conclude whether the bulls or the bears have that equilibrium. So this is the weekly time frame, and you can see, guys, we are just trading sideways. What's up, Tainch? It's good to see you, brother. Endless possibilities. It's always good to read that. What is going on? Lock Doctor said, someone just tipped me that TMO has a huge pullback, and they are my pick at Shovel. My MJ play for the next 10-year cycle. Wow, that's a big That's a big move, dude. That's a big move. Maybe we could take a look at that one in just a minute. Next up, let's take a look at the small cap stocks. Now, you guys remember I drew this out a while ago. This is just trending up and it's continuing to trend up. Now, this is the weekly time frame. We're going to go back to the daily because I think more people are used to seeing this. You can see we're squatting down on a 200 moving average. Positive signs are we are still above or close, very, very close to being above that 200-day moving average, and the moving average is trending up, as well as this ascending trend line is also trending up. So that's a positive sign. We break below this, I won't be saying those same damn things. NASDAQ and QQQs are going to look quite similar as the NASDAQ reached those new all-time highs and pulled back, still creating this new higher low here. So that's a very good sign for the NASDAQ. The QQQs are going to look very similar as it is tech heavy as well. And you can see new higher lows could be a very good possibility. With all this being said, I do want to take a look at the futures index to see where we are sitting right now. So let's just look at the 5-minute time frame, and we are gapping up a little bit right now. We're above that 6,000 area, so that's good. This is the E-mini S&P 500 index futures, and this is what we look at because we have extended market trading and all that good stuff now. So I don't know the halves of it, but you know, it seems like all you youngins with all your cell phones and stuff want to keep on trading. The Dow Jones Industrial looks like it took one of the biggest hits. Now, we know that the IWM is the lagger, but we know that the Dow Jones Industrial is below that 50-day moving average. So the IWM is the worst, but Dow Jones Industrial was able to contend with the big dogs, with the NASDAQ, with the SPY. It's a slow-moving boat, and it was rip, tater, chip for quite some time. Now, just absolutely tanking below its 50-day moving average, still could create this new higher low, but this chart just doesn't look nearly as clean as some of the other ones. Oh yeah, B. Stewie's in the building. B. Stewie is out for a walleyes game right now with his youngster. So shout out to you, B. Stewie. Still stopping in to say hi. That is dedication, fam. We do appreciate you. The beef stew, baby. The beef stew stopping.
Oh, I see you over there. You got problems? We've got the beef.
That's right. We're going to do it. We're going to do it anyway, baby. The beef stew's in the building. We're going to make sure that we honor him with that video. Now let's keep on keeping on, people, because we have a lot we need to go over. Next up is Bitcoin. I absolutely love the look of this. It's starting to get really tight with everything else pulling back. Bitcoin is still holding its new higher lows as well. And as you guys knew, I did have a small bid in MSTU, which is the 2x derivative of MSTR. I did get stopped out of that on Friday, as well as getting stopped out of a lot of other bigger positions. Of course, I still hold APP. I still hold a few other stocks that never actually stopped me out because we got in at such a good price. But Bitcoin is still trading sideways. And if you guys remember right, we actually called this out when we were right here breaking out of that 100,000. I put a vote in the poll and I asked you guys what was going to happen after we broke 100,000. If we were going to continue higher, head lower, or just trade sideways for weeks on end. And you guys were right. You said trade sideways for weeks on end. And here we are still lingering around that $100,000 area like some bad breath in Bitcoin. So now we are going to go over the sectors. This coffee sip is for me. It's not for you. I am parched. It's good to see everybody in here. I am pumped. Zamora says Zeta, Z-E-T-A. We can take a little peeky gander at that in just a minute. Of course, we will get to any stocks that you guys want me to take a little peeky gander at. You want me to analyze a stock? We will put it in the chat. Just hold on to those reins just for a little bit longer. We will get there in just a few minutes. Let's run through this sector list because I really want to figure out which sectors are the hot sectors and which sectors we really need to stay away from. We're going to run through this pretty quick, so pay attention. XLK, which is your technology, below a 50-day moving average, but still looking strong compared to a lot of the other sectors, still making new higher lows, but below that 50-day moving average. So keep a close eye on it. XLY, that's your consumer discretionary. Jolene Martina has blessed us with her presence. It's good to see you, Jolene, the egg queen, baby. XLY is your consumer discretionary, and you can see, guys, that this has been the worst year to date as we looked on the selectspider.com. The XLY has been doing bad. Now, it is at an area of support, so if it can bounce here, consumer discretionary could turn around. I like to watch HACK. Now, HACK is still above its 50-day moving average, which it has shown multiple times that this is an area of support. Will HACK hold here? I would like to see it. That is the cybersecurity ETF, so if it can hold, get a hold of your package software stocks and get them ready and willing. Get them online because this could be a banger in the future. Now, XRT is retail. If you guys aren't aware, or if you're sleeping under a rock, retail took a huge hit. Anything in the retail space just pulled way back, not just way back, but below a 200-day moving average. And if you guys don't know, my grandma has said since day one, we don't mess with anything below the 200-day moving average. Nothing good can come, Sonny, under the 200. The communication services, or XLC, as we have talked about before, is banger, is absolute rip tater chip. It's still above a 21-day moving average, which tells me that the communication services still is holding on very strong. As you can see here, we have a cup with handle. If we look this on the weekly time frame, as William O'Neill might have seen it himself, we have this cup, we have a handle. I would like to see a little bit tighter of a range before getting into something like this, but we know that communication services is hot, and if it wants to continue, we need to make sure and take note of that when we're making our selection and making our trades. We know that communications is hot, so we can put more equity or more strength into that trade, knowing it is in that hot sector. We also have IGV, which this is the tech software. You can see a big pullback in that below a 50-day moving average. We also have the consumer staples. Now, as you guys know, when consumer staples are doing well, it's usually an act of defense. Now, you guys can see right here, if I draw this line out, you can see this act of defense, or the consumer discretionary stocks, are starting to do well. If this thing breaks out of this area, it might get a nice run, reaching new all-time highs very soon. I'm not calling it, I'm not saying that's what's going to happen, but I have to take notice to these things, because if consumer staples starts to run and your more cyclical stocks start to rise, and the speculative stocks start to continue to head lower, and you start to see more fear in this market, then that is when we need to just be hands off, wait for the market to cool down, and wait for our trades to set up. Next up is going to be, let's see, KRE, which is regional banking. This is the mid-size banking, not doing as well as XLF, which is doing a very good job, still above a 50-day moving average, and kind of like consumer, communications. It has this cup with handle, and on the weekly time frame, you can see it right here, a beautiful cup with a handle. So if it breaks out of this 52 area, I think the XLF can do really well. Goldman Sachs, all your different banks, but I identified a long time ago, Goldman Sachs is your leader. It also took a pretty big hit on Friday as well. And just a few more of these guys, I want to run through them. XBI, which is biotech, still well below a 200-day moving average, guys. So biotech, I know that there's a lot going on out there. I know that biotech looks hot. There's some pharmaceuticals, and we're going to go over a few of those pharmaceuticals as well. But it's just not in a good sector. It is creating new higher lows, and it could be the next thing to come out, the next big thing to happen. But we need to understand, when we're looking at these things, the biotech is in the dumpster. So keep that in mind. XLRE, this is real estate. It's getting a nice bounce just above a 200-day moving average and above all other moving averages, so it needs to continue higher. as we also now have, let's see, XLV. So this is the healthcare. I was telling you guys this multiple times that it might bounce off this area because it's a huge area of support, and it did. But the issue is we're running into resistance. Not only the 200-day moving average, but we have a technical area of resistance at this 150. It just can't get above it. But a new higher low has been put in here for healthcare. And I really think if this healthcare holds out right here and can break through this 150 area, I think healthcare is going to be the next big thing. We're going to get rotation back into healthcare. So keep an eye on healthcare. It's very, very close to having a nice continuation here. RSP, so this is the equally weighted S&P 500. You can see we're sitting right down on a 50-day moving average, so we really would like to see that breadth in the market bounce back up here. XLI is going to be your industrial below a 50-day moving average. We're going to carry on. XLE, this is energy. Now, there's been a lot of talk around energy, okay? Everybody's saying that energy's hot, energy's this. Well, let me tell you guys something. If you guys think energy's hot, just wait, okay? Because from the way that this looks on the daily time frame, you can see all these new higher lows. And with that, I want to zoom out to the weekly and then look at it as we can see all the new higher lows as things are really starting to turn around. You can see my best case scenario is starting to play out as we start to get tighter and tighter and tighter. I'm actually going to delete this, and we're going to put this on a monthly time frame. Now look at this, folks. If we look at this on a monthly time frame and we think about how I interpret daily time frames, we would say this. We would say new higher low, new higher low, new higher low, new higher low. Now, all we are waiting for is this basing area to break out, but what we need to see is tightening range. So if we can get a little tighter here, whether it's within the next week, whether it's in the next 3 months, I don't care. I'm going to wait patiently. But if we do start to break out here in XLE, you better make sure you're on the right side of this trade because this trade can be astronomical, okay? Now, with that being said, are we going to take the natural energy, you know, the energy that's in this sector, or are we going to look more on the nuclear side, folks? Are we going to look more on the nuclear side? As nuclear, the NLR, the VanEck Uranium and Nuclear ETF, is still holding out very, very well. Let's look at this on the daily time frame to see where we are at. Now that we pulled back to the daily time frame, I have to retract my statement and say we are just below this 200-day moving average. The last time we were here, we did bounce, and it's still in a positive uptrend, so that's a good sign. But it needs to hold out here. It needs to hold this new higher low, okay? But back to energy, folks. I'm telling you, if energy wants to continue to coil, to continue to make new higher lows and new lower highs, you can guarantee there will be expansion in energy. And if we play the trend, it should be to the north side, okay? So if you take anything tonight, please remember XLE. Get your energy stocks ready because if they aren't already rip, tater, chipping, it's going to be very, very soon. XLU, now we talked about utilities. As long as they continue to cut rates and the foreseeable future continues to cut rates sooner, we should see XLU continue higher. Why is it so hard to play XLU? Well, you can play XLU if you want. It's a much slower mover, probably not even 1%, but the stocks in XLU are usually big boats and they're hard to find fast-moving XLU tickers, okay? But XLU is doing well. So we know XLU, XLF, and XLC, communications, financials, and utilities are banging right now, folks. And energy looks like it is coiled and setting up really, really well. So if you took anything from any of that, know that the hot sectors are XLF, XLC, and possibly XLE in the near future, with XLU being a hot sector that you can't really play. All right? Let's also look at gold as at an all-time high. So gold as well. Gold as well, folks, okay? So that is that. Rip, rip, tater chip, baby. I hope you guys paid attention because that is our hot sectors for the near future, okay? One thing I also like to look at is this. This tells you the percentage of stocks above the 50-day moving averages. And you can see the majority of stocks are below their 50-day moving average, okay? There are more stocks below their 50-day moving average than above that 50-day moving average, okay? So be very, very careful with that, all right? All right, now, one thing I do want to point out, because everybody absolutely loved this, because we are going to go into the watch list right now. But I'm going to show you guys just an absolute game changer. We did this in the Discord meeting on Wednesday. And if you guys want to be a part of the Discord meeting, of course, just hit that like, hit that subscribe button. We have this link tree. Click on the description down below, whether you're watching right now live or if you're watching this at another time. Thank you for making it this far in the program. But you can go down here, you can click Trading View. That is the charting platform that I use. You can download that absolutely free. You can go to our YouTube page, and our Discord is right here. You can join for free. The only thing we ask, if you're going to be a part of our Discord, we don't do, buy or sell recommendations in there, nothing like that. We're only there to learn. We post learning things. So if you're going to get in or out of a trade, we say, hey, we bought this trade at $11 with our risk in mind, our stop being this price, and we would like to see X amount of R, or we took it because of the catalyst, or we took it because it's a basing breakout. We have to explain and articulate our trades, or they are gambles. If you just took it because you like the stock or because whatever reason, you need to have a play in process. So we take our Discord serious because we take our trading seriously. So hit that like, hit that subscribe button, join up. Let's do this, guys. Let's get right into the watch list. Now, I have plenty on the watch list, but when it comes to the watch list, a lot of times you'll come across some stocks like I did today where you're going to say, well, these are very, these are pretty speculative. You know what I mean? And one of them I found was ETNB. And Jolene says, look at the VIX. We actually did already go over the VIX, Jolene. And you can see here on this daily time frame, the VIX is very, very high. It is very dangerous, and we do need to take heed when the VIX is this high. Now, I have people that say the exact opposite. When we have the fear index this high, that's when people buy, buy, buy. So do keep that in mind, that this might be the perfect storm for you to start buying up now. But for me, I kind of need to wait to see those new higher lows. So just keep that in mind, folks, okay? So when we look at stocks like ETNB, when I pick this up and I go, wow, what is this? And then I bring it up here, ETNB, and I bring it up on this and I go, wow, you know what? I like this stock. We get a big push up on volume and a pullback as it creates this high, tight flag. And I mark this all out and I think, wow, this is just, wow, I can't wait. This is something I want to buy. This is something that I like. It's riding the 10-day moving average. It's tightening, this tightening pattern. If it breaks out above here, I want it, I want it, I want it, right? That is what we do when we are technical traders. We see these, we want to buy these, but if you are a can slim trader like myself, I use that as my basing, my fundamentals to understand how are the quarterly earnings, how are the annual earnings, are there new products, are there blah, 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 blah. You guys know it, right? There's a lot that goes into it. But with AI on our side, we can do something as simple as ask it. And what did I ask? I said, is stock ticker ETNB work under the can slim method? There is no shame in doing this, folks. Absolutely no shame in doing this. If I want to know the most that I possibly can, I'm going to use AI. It is a game changer. And Jolene, you should be sorry that you were late. I cannot believe you. So when we punch this in, ETNB, will it work under the can slim method? It says yes. Yes, it will. Now, I'm going to spare you some of this, so I will go over it quickly. But let's go over it. First, quarterly earnings looks for a significant increase in earnings per share, ideally 25% or more. This is unlikely to meet that criterion right now. Annual earnings growth, seeking consistent EPS growth of 25% or more. This says, I'm unaware of it. It probably doesn't fit this part either. New factors. Now, I can't confirm the high, but this is a plausible fit given the industry. So the new factors, meaning because it is a biotech, a lot of the times if they have big breakthroughs, they have significant new products in that line. Supply and demand. This says speculatively without specifics on shares, outstandings, or recent trading activity. So high volume on good news could align it here. So it does have the volatility. Leader or lagger, the stocks should be a leader in its industry, operates in the competitive NASH space up against bigger players like Madrigal Pharmaceuticals. If it's in pioneering and unique approach or outperform its peers in trials, it could qualify as a leader, but it's not yet clear standing out based on general knowledge, institutional sponsorship, and market direction, okay? So does it work with CanSlim? And it says you'll need to check its latest earnings price action and market context to be sure. Let's see. I'm sorry. It might shine in the new developments and possibly the supply and the demand or institutional interest if events align, but it likely falls short on the quarterly earnings and the annual earnings due to its profit stage, and L&M depend on its sector position and its market conditions. So it kind of says right there, like, this isn't something that we want to be a part of, but if we still like it and we want to know how much money it has left. What's the burn rate? That's what I always called it. But Dan Bob has brought it to my attention. The best way to speak to this AI to get its cash evaluation is to ask it, what are the cash runaway metrics? Basically, how much money does this company have until it loses all of its money and it will have to dilute its shareholders to make more money? So to evaluate the cash runway, and it gives you all of this estimates, all of its thinking. It's a beautiful thing. We scroll down here and it will say the cash reserves on Q3 are $423.8 million. The estimated burn is $206 million, so 25 months. It has 25 months left to live, or around 2 years, until this company will have to find a way. It will have to find a way regardless. Either they will close down and go bankrupt, they will dilute their shareholders in order to gain more money, or they can't, they're done. Goodbye, you know? So that is one thing that you can do. And you can use any form of trading metrics. I just like using CanSlim because it helps me keep my money in there longer, knowing that we are actually in a decent stock, okay? So when you're looking at some of these, you can use AI to your metrics to help you, okay? So ETNB, this is on my watch list. I like it. I'm not gonna play it because it is a biotech. It does not look good when it comes to the CanSlim, but when we look at this as technical traders, this is what I like to see. Now, there's plenty that we have had go. Now, I don't mean to be the bearer of bad news. I always like to be positive, but we have a lot of broken charts now, a lot of gap downs, a lot of hurt in the market, as you guys seen here. And if we look at the S&P 500, as swing traders, we're in a very hard time this past month. So if you guys see here, the last time we hit these all-time highs was in December. And then in the start of January here, we were all the way down here during a pullback, and we have came up multiple times. So this year, between December and now, or you could even go back as far as November, really, we've just been trading sideways. This is that choppy action. It's hard to get there. What's up, Brendan Long? We'll go over SoundHound in just a few minutes. The S&P 500 just chopping sideways like this makes it very hard for a swing trader. I will say this, markets like this, easy to trade. Easiest market for me so far to trade was right here. Right here, all through this. Why? Because it's holding a 21-day moving average. The money printer is still doing its damn thing, and we are still kicking ass and taking names. I'm sorry, the money printer was off here, but we were in a very beautiful bull market, okay? So next up, CORT, another broken chart. It was trending beautifully, and now we have to wait for it to set up. Dave, now you guys know that I was in Dave. To me, I still think it has a chance to bounce up here, but it is below a 21-day moving average, and it's below my buy-in price. Technically, it hasn't hit my stop loss just yet, or if it did, I think it did in the after hours. I'm going to hold on to this until the morning. I'm going to give it one more day to see what it does. And, to me, though, I mean, if it doesn't hold this area, this is its biggest area of support. This whole area right here, it's a whole area of support. So if it cannot bounce here, I need to be hands off Dave. All right. Next is Kava, broken chart, below a 200-day moving average. This thing has to get removed from my list now, unfortunately. CDNA, if you guys remember, I talked about how it's holding this 200-day moving average. It's getting very tight now, right in this trending area. If the health and technology sector starts to head higher, I think we're going to see CDNA want to rip here. So keep that in mind. AXGN is still holding up very nicely here. We have GEO. Now, we are still watching GEO because we were talking about what a beautiful base breakout this was, and it did. It broke out, and we made a little bit of money on this, but now that it's breaking down here, this is a broken chart. I told you guys after we just ripped right back down, I didn't like GEO anymore. It did bounce off this area, but then it just continued to sell off. And now that area of resistance is resistance once again. So this will be off my watch list very, very soon. TSSI, still don't like this stock. Still don't like it. It's very choppy up here, but still holding above a 50. Netflix, this was my lovely Netflix. It hasn't closed below the 21-day moving average yet, so I'm kind of just holding off on it. I held on to this for all of this trade. This right here, I actually exited out. I was in Discord and I said, I can't believe that I'm up, whatever it was, like 10R on this trade. So I exited right here at the top, and now I'm still holding on to my last half. I will sell at break even. If it breaks below this 21 tomorrow, I will sell at break even. And it's still a win for me, but it kind of sucks given all that last half back. Because, I held on to it for 2 weeks and my money was hard at work. But still, we made money on the stock. AS breaking the 50-day moving average. Net big pullback. You need to see it hold this area. If not, it's going to retest that 139.50. BSTG garbage. Going to get rid of this now. Google, I'm still just keeping an eye on. But if you guys remember, we exited here before earnings. Earnings came and it gapped down below this area, broke the 50-day moving average, and now is continuing to head lower. That is why we have sell rules, folks. We sell before earnings. We sell when it breaks trend. We sell when it breaks moving averages. That's why we do that, because it can continue to head lower. You can always buy back in. But if it breaks one of your main rules, you need to get out. APP, guys, if you guys remember, I was up over 10% on this trade. And I held on to it through earnings. We got the gap up. I was up over $250 per share. It was absolutely beautiful. Up, I couldn't even tell you how many percentages off of this area right here. Let me see. We were up at one time over 58%. I'm just holding on to my last half. We're going to see what happens with this trade. I still have it set to break even because I would love, and I mean absolutely love, so my break even is down here at 345, but I would love to be able to hold on to this thing where it just stays above the 50-day moving average. Like, I would like to use the 50-day moving average now as my stop loss. So if I can just continue to hold on to this, that would be great. We could consider that a position trade. I stopped out of my last half of Reddit. We made some good money on Reddit after earnings, though. It came right back down, stopped me out for my last half, no big deal. SE, I haven't looked at this in a while, but if you guys remember the SE Limited, we really liked everything about it. A beautiful cup with handle, still continuing to break out. A nice pullback here, but still above a 21-day moving average, so it's looking very, very good. And now I have a few more that I'm going to go over. Make sure you hit that like and subscribe. But guys, now is the time that you can start putting in your tickers. Throw your tickers in the chat. If you got something you want me to look at or something you want me to talk about, I don't care if it's a small cap, mid cap, large cap, or if it's a slow mover. I will look at any stock. I will talk about any stock. We would like to see it above a 200-day moving average trending to the north side. That would probably be the most ideal situation, or at least a stock that has a big bout of volume before it has pulled back. So we'll go through a couple more, and then you guys let me know. I see IONQ and Mara coming in. Let's see. Dan, we'll look at Dan as well. We'll look at Soundhound. We'll definitely look at all of that. I'll just go through a few more, and I'll let you guys punch in whatever you want, and then we'll go over it. Bros looks like it is one of the strongest out of this. And when I say strongest, it still took a smackdown below a 10-day moving average, but still above all other moving averages. So that looks really good for Bros, and so does its earnings. I mean, its earnings came out a double beat. The surprise of 280% on its earnings per share was a beautiful thing, and another 7.53 on its revenue. You can't get much better than that. Bros is still absolutely killing it. I would love to find a way to get into Bros, a trend or a base breakout. If it ends up setting up for me somewhere in this area, I wouldn't want to miss that opportunity. Hood had a huge pullback as well. Big run. Hood had a huge run. Beautiful thing. Let's see how our leader is doing as it broke those regression channels. Howmet Aerospace, HWM, the leader in the aerospace and defense, in my opinion, looks like it did pull back down to its 21-day moving average, but still looking really, really good amongst all of its competitors. Like Redwire Corporation, if you guys remember, I ended up exiting Redwire Corporation right away. I didn't like the financials. I didn't like the speculative aspect of the stock, where I'd much rather be in an HWM. As you can see, it's still held up much, much better. BYRN, on the other hand, still above a 50-day moving average, but Brendan, my bad, dude. Dan is a stock, though, just so you don't think I'm crazy. Dan is a stock, and it's a stock that is holding a trend to the north side. So you can see where my confusion is. But yeah, I feel you, homie. My bad. Rocket Lab took a big rocket dookie. One of its burners must have fell off. So let's go ahead and spin this rocket down, because it looks like that is where it is headed. As it broke its 50-day moving average, looking like that big drip here. Dan pointed out a long time ago when we were playing this, I did try this stock right here when we had that trend breakout. I really liked it. Maybe it was this day that I tried it, or this day. Either way, I did end up stopping out of Rocket Lab. I know a lot of us were trying to get a hold of Rocket Lab. And look, guys, it looked really, really good right up until here. When it broke all of these moving averages at 27.10, then it broke its new higher low. After breaking that new higher low at 26.50, there was no hope, in my opinion, for the stock. It needs to hold here now, create new higher lows, and prove itself to us. And until it does that, it's not, in my opinion, a good one. Root pulling all the way back now, coming back just as fast as it went up, if not even faster. So we're going to see if this wants to create new higher lows, because this is a great stock. I like Root. INTA kind of below its 50-day moving average. We're going to have to exit some of these, what I was saying, leaders, as Wix. Well below its 50-day moving average, and Meta finally getting a pullback, as it had such a tremendous run. So we can see here, and CYBR, as the leaders hold that 21-day moving average, CYBR still doing a very nice job. As if this does well, and I think cyber is going to continue, this would be one of those stocks. All right, guys, well, we still have some time. Let's go over what you want me to take a little peeky gander at. And we'll start with Norman Conklin, because he is a member. Norman, I do need to give you a shout out and tell you thank you so much for being so supportive. Thank you for being a member, and thank you for constantly supporting this channel and supporting yourself by always reading, always doing your due diligence, and always bringing us good tickers to take a little peeky gander at. So shout out to you, Norman, for that. And we'll look at your TUYA right meow. As TUYA, it looks like it is a banger of a mover with an RS rating of 98. You can see right here on the EPS and the sales, we are over that 25% threshold that we would like to see. And you can see here on the earnings down here at the low, it is starting to build up a very nice earnings base. So let's go ahead and add TUYA to that leaderboard list. I'd like to keep an eye on this. And we also maybe need to throw this at Grok and see how it fits its description. But you guys can see here, this thing has really been moving, and it's been really, really fast. What I really like to see about this is look at this trend break. This is the kind of crap we're talking about right here. Right here in front of your eyes, folks. And with the overall market pulling back, it's still holding the majority of its gains well above its 10-day moving average. I'm imagining this is probably a very speculative stock. Let's take a look at the more financials to see its free float is only 421 million. So a little bit higher than I actually anticipated, but still a pretty small float in comparison to some of the bigger stocks. So be careful when you're playing this. But yeah, this TUYA, definitely a mover. Definitely more speculative as it is going to move a lot faster. So keep risk in mind with anything that you do. But this TUYA, I'm going to put it on here for the $1,000 account challenge. If this TUYA can show a base or a trend breakout just like this one right here, if it can show it again for me, ooh, watch out, baby, because I want to make me some money. Let's see what else we got here. So we'll look at sound. So there's an issue with sound, and that is that it's kind of a broken chart here. So we have this big run up, and you know, this is exciting. This is what we want to see. And if we didn't see anything like this, we just seen it to here, I would say, oh yeah, this thing's tightening up. I'd want to see a couple more inside days so that way we could form what we would consider a trend, you know? And if we had a trend like this, I would say, yes, this is beautiful. But SoundHound has broken all of those averages, and it continues to create new lower highs. And when it creates new lower highs, it shows the bears are in control, okay? It needs to hold somewhere, and wherever that is, I don't know. But after it holds, it needs to make new higher lows before we can trust this chart again, okay? So I don't like SoundHound. I don't, you know, of course, you know, they had bad news as well, which I'm assuming is this gap down day. But, you know, they moved up and then they pulled right back down. NVIDIA then exited out of their holdings within Sound, which is another kind of, you know, knockdown. Now, of course, you could play the opposite side of this. You could say, well, sure, but that doesn't warrant, you know, Sound going that hard, that fast, down hard, that fast. And you could be right. But for me personally, the way I trade, it's below all of its moving averages. It's a broken chart. I don't care for Sound anymore. But if you disagree, tell me why. Tell me why. I would truly like to know. Let's see. And then so Brendan actually said possibly making support from previous high last March. So yeah, so I can see that. So I actually have a white line from here where it might show that support. I don't think there's a ton of support there. I really don't. Now, I could be wrong, but regardless, I'm not going to bet on it being supported. I'm going to wait, see that it's supported, wait for it to make new higher lows, so that way I have an area to risk off of. Right now, I'm risking the low of what it's at right now, and then it stops me out, and then it stops me out. And then it, you know, the dip just keeps on dipping, so we got to wait for it to form a base, kind of like this. So if it came straight down like this, I don't know when to buy. If I bought here, I'd lose money, lose money, lose money, lose money. I might get lucky here, but what I rather do is wait for it to create new higher lows, and it does here. Here's a low, new higher low, new higher low, new higher low. It breaks its trend. I would want to be in this thing, right? But if it breaks this low here, I want to exit. Okay, so I want to wait for this to make those new higher lows before I decide to start getting into something like that. Woo, long-winded on that one. So IONQ for no E, and if you take a look at an IONQ, you can see here, it's just kind of a broken chart. It's below all of its moving averages. And if you guys remember, I was talking about IONQ, this area right here, being an area of resistance. Let me bring it up on this. It's easier for me to show. But you can see right here, I drew these lines out because this is the highest area of volume traded. Actually, I can even show you guys on volume profile, and we can even pull an anchored VWAP. Here's all-time highs anchored VWAP. And you can see if we pull volume profile as well, we'll do the VIX volume profile range from here to here. And you'll see, look at right in this area is its most area of traded. So right here at this $42 area, we'll just call it, okay? So at this $42 area, you can see we bounced back up after a huge sell-off. This is your deep seek sell-off. It sells off very hard and it bounces and it goes right into that $42 area. We went as high as $45, but that $42 area, you can see we started selling off. We started wicking very heavily in this area and then we rolled over. So you can see that IONQ isn't doing so well. Now, the best case scenario would be for this monkey to hold this low, form a new higher low, and then start to head higher from there. That would give me more confidence that IONQ has the ability to continue higher. If not, I'm going to consider all of this mess, it's stage 3, and then it's starting a stage 4 right now. Now, if you remember, IONQ was married to, was it Qubit, CUBT? Now let's look at Qubit. As if you guys remember, I was very, very closely watching Qubit because this is one of those high, tight flags, just like this was, It had 1, 2, and then the third leg, nope, did not, could not, would not. DeepSeek came in, smacked this baby down, and I even said, we're probably gonna bounce back up into this $18 area and sell back off again. We didn't even get as high as to going there. That DeepSeek kept it down. Now, QUBT, does this warrant a bounce? It sure as hell could. Will it? I don't know. There is better risk reward for Qubit here than IONQ as it's sitting and squatting down. You could use a 644 as risk, but these aren't buy or sell recommendations. Let's go ahead and look at Mara. So Mara, just like Riot, they're all going to be beat down, guys. And if you guys look at Bitcoin, right? So these are Bitcoin miners, Riot, Mara, CLSK, which is like Clean Spark or something like that. These are all Bitcoin miners. They are not trending higher anymore. Bitcoin has been trending higher. These Bitcoin miners have not been trending higher. They're garbage. So Mara, Riot, not doing very good. Of course, you could buy off of these lows and hope for a return, as it very well could bounce back up from here. It's just not how I play. I don't buy lows like this because the lows can keep on going lower. I also don't look at anything below a 200-day moving average. So not for me. It could be a buy the dip scenario, but it is not my buy the dip scenario. Naiguanyen. I really wish I could say these Indian names better. I promise you guys, the more my Indian homies from the East, the more you guys show up, the better I'm going to get at pronouncing these. But Hyen Nguyen, VRT, and boot, please. So VRT just made it below this 200-day moving average. We liked VRT here with this cup. No handle breakout, but after this gap down, it was a broken chart, and I did not like it. Now we're below a 200-day moving average. Now, one thing I will say with Vert, it's got awesome EPS. It's got awesome earnings. Things are looking very, very good for VRT, and its pullback has not been this well warranted unless I'm not seeing the proper news. So maybe it's its guidance that really hurt this, because this just happened just after its EPS or its earnings debut. So we'll have to look into that. Vert's looking like more of a broken chart now, personally. So let's take a look. What else did you say? Boot? Is Boot a ticker? Yeah, so same thing with Boot. It's looking a lot like Vert, a broken chart. After EPS, we had a big push down lower and below a 200-day moving average. So not looking too good. I see y'all in chat. You guys are absolutely kicking butt, taking names. Nothing but love for you in the chat. Thank you guys so much for being here. If you haven't already, hit that like, hit that subscribe. We got 23 votes already. Hallelujah, baby. 30% think the SPY will rebound from this pullback. 17% said heading lower, red, red, red. 43% think more sideways and choppy action. And 9% say as long as we hold those new higher lows, we good, brother, we good. So make sure you vote on the poll. That's going to be ending very, very soon. And if you haven't already, make sure you put a comment what ticker you want me to look at. We're going to go through everything until I am all the way done with your tickers. If I make it to the bottom of the comment section, then we will be done. But until that happens, I'm here for you, my bugaboo. All right, let's see what else we got here. Didn't mean Dan as a ticker, yeah. That's too good, that's too good. Trump is cutting military spending, bum, bum, bum. CRK. So let's take a look at CRK as this is Comstock Resources. Look at this thing, beautiful, above all of its moving averages, and it looks like it is an energy material, oil and gas production as its earnings continues to creep higher. Its annual and its quarterly looking good, at least at first glance. This engages in the acquisition and development of exploration of oil and natural gas. The firm operates concentrated in the Haynesville Shale and Primeral natural gas basin located in East Texas. Well, shoot, brother, why didn't you just say so? So CRK is looking good. It's, not necessarily in the hottest sector, but you can see with the overall market pulling back like it is, this is a strong stock. Its relative strength index compared to the overall market is 98. So this might be something I kind of want to keep on our watch list. Let's just go ahead and do that. We threw the CRK now on our beautiful, beautiful watch list. Let's go ahead and I'm going to do more. I'm going to dive a little bit deeper into CRK, but what I will say is this. They had a nice EPS beat and a sales beat. They have a gap up and a pullback. If it can get tight here, that would be a good sign. But look at this. It's constantly trending up. It's doing very well. High RS rating. It's starting to grow. It's starting to develop. This might be one of those young companies that continue to grow over time. Might be one that you might want to keep on your watch list for a longer term trade. We also have BB. Yeah, we can take a look at BB. So Dan Bob loves this damn blackberry. Blackberries are delicious, but if you try to eat this one, you're going to get some crackles. You're going to get some crunch. Blackberry has been rip tater chipping off this beautiful trending base breakout. I love these new higher lows and how it gets really tight before breaking out. It was a beautiful trade, now below its 10-day moving average. Are you still holding on to this, Dan Bob Dan? I'm curious, or are you going to use the 21-day moving average as your stop? You guys can see here they've had some mixed conditions with their EPS and sales growth, but you can see on the technical pattern, this BB right here set up so extremely well. I absolutely love the way this thing's set up. And this is Dan Bob right here because he is an OG. Shout out to all my OGs out there. You guys know I love you. We have so many awesome people in our Discord that just hang out with me. Sometimes I'll be at work. We just hop in the Discord. We just chat about tickers all the time. We go over the do's, the don'ts, different things. The last one was volume on pullbacks. We talked about it for like an hour. I know we're nerds, and if you guys are too, you're more than welcome to join the Discord. Just remember, these aren't, nothing is buy or sell recommendations. We hop on there. We're there to learn. We're there to learn from each other. We're not there to boast or brag about how much money we have, how much money we've made, or hell, how much money we've lost. We don't talk about that. If we say we're getting into something, we're getting into it, but we're also going to tell you where our stop loss is, and we're going to follow up with how that trade ended up working out. We're very real people. We do real trading, and we have real hearts of gold with an open mind. So if you want to join, hit that like, hit that subscribe button, join the Discord. It's in the link tree, baby. So let's go. What do we got next? So we went to BB, PLTR. Sergio Martinez says, hey, I think your Discord disappeared. I don't think it did. We're pretty still well alive. You probably just left us because you hate me. Let's see. B. Stewie says, hit that like and subscribe. Thank you, sir. So PLTR, Brendan Long said, would love to see it down to 85 to fill the gap. I can totally understand and see that. We've been seeing a lot of gap fills lately, and that would be kind of a cool retest, right? Especially because if you're like me, you're not on this PLTR boat, because even if you were, like Dan was, we didn't have enough in it to hold through earnings. You want to be at least around 20% up. I'll give myself a golden rule of 10 if I'm selling over half of my shares, but you usually want to be closer to that 20% up to give yourself that cushion in case the earnings go sour. And this here, I know he made a good amount of money playing that pullback there. And you can see here, we exited before earnings and it had a nice gap up. Now, yes, I could see it pulling back to that $85 area, just like you said, Brendan, filling that gap and then creating new higher lows and then continuing higher, as PLTR has shown awesome EPS and sales growth recently and continually, and future guidance looks very, very good too. So yeah, I couldn't agree more. A pullback, fill the gap at 85, and let's see it rip, tater chip. The having hurt the miners' ability to take profit. Let's see. No E says it isn't Indian, it's Vietnamese. Thank you for explaining that. Hen Nguyen. Well, thank you so much. That makes it so much easier to say. So Hen Nguyen. I hope I can remember to say that. And thank you for correcting me that it's not Indian, it's Vietnamese. Yeah. Just call me an ignorant American. You know what I mean? But Hen Nguyen, I'm all about learning, because remember, folks, you are a loser unless you're learning. And we learn something each and every day. So Hen Nguyen, I greatly apologize. Thank you so much for joining us. I hope I have earned that like and that subscribe from you. Did you close your Discord? No, dude, it's wide open. Welcome, family, welcome. mRNA. So I think we already went over mRNA. I don't like it. Oh no, I'm sorry. We did not go over mRNA. We went over MARA, M-A-R-A, and I didn't care for it. Now, last time we went over mRNA, we were just at a low. We had a small bounce after earnings. I don't know what's going to happen with mRNA, but you guys can see here, we're well below a 200-day moving average. Some people, like buying these lows and holding on to them because they think, you can't go any lower. The same people thought here, the same people thought here and here. You can play this bounce. You could play this. You can make some money. It's just not how I play. I'm looking for momentum stock that don't have, so I don't care for Mara, but what I will say this. There's ways to make money in every stock. There is opportunity that lies in every corner. Our whole idea is to find where the money is laying and pick it up and collect it. If you can play a stock like this that's below a 200-day moving average and play certain bounces or play before earnings, be my guest. Make your money. I don't want to argue with you. You're going to make your money. But for me, I can't play a stock that's below a 200-day moving average. I can't play a stock that has earnings the next day. I cannot play those stocks. I have very strict criterion, and I just can't see mRNA being a healthy stock to be a part of right now. For me, I would want to see something like this, just like we talked last time. mRNA getting a huge pop-up and then creating a new higher low. I know we had one of our gentlemen in the Discord talking about mRNA and playing this. Very, very exciting when you're in trades like this, because, they could make you a good amount of money. But just remember, you have to have a plan. If you don't, plan or trade your plan, then you're planning to fail. It's never a good sign to just take something willy-nilly. Let's make sure that we have a plan and things that are set in place. And right now, my plan is to stay away from mRNA because it's just really, really beaten down. we're going to need to see something, maybe a gap up, but even then, we have a lot of overhead resistance in here. So just something I'm looking at, guys. If you're looking at a stock like mRNA, maybe find something newer, like a newer IPO that's like a Moderna. But right now, Moderna has a lot of fighting it needs to do back. Just for example, the RS rating for this is 8. So what I mean by that is if the S&P 500 does really, really well, Moderna's not going anywhere. mRNA is not moving very fast. And if the market tanks, mRNA is not going anywhere. It's not going anywhere fast. It's kind of boring, and it kind of sucks to have your money in there. If it is exciting for you, it's because you have a ton of money in it. You probably are oversizing, but you know it is what it is. That's mRNA for me. Let's see. Agree with you on PLTR, Brandon. Dan Bob says. Sergio Martinez says, hey man, your Discord, hey man. He says, hey man, your Discord disappeared. Sorry we weren't cool for you to be on the group. I don't know what you're talking about, Sergio. You're always welcome here, brother. You know I love and appreciate you. Dan Bob says he needs to figure out what he wants to do with BB. Are you going to sell or are you going to hold? Well, you better figure it out, brother. You know, if you want to figure it out, maybe give it one more day. That's what I like to do. I like to say, one more day, and it usually will tell you. It will usually tell you, and you can see we're above a 21-day moving average. You can see it held the 21 the majority of the time before, all the way back into here. So maybe just use that 21-day moving average, and I know you've already taken profit, so you're sitting pretty. Enjoy your trade, and I hope you do whatever you think is best for your trade. Let's see, VKTX. I see Momentum Masters. I like that. Momentum Masters says eat my shorts on Tesla. Got a perfect average on them. Haha, eat it. Momentum, dude. Always in here with the eat my shorts crap. VKTX. So again, Viking Therapeutics well below a 200-day moving average, below, you know, a lot of overhead resistance here. I really liked VKTX here. If you guys remember, I even had a trend line broken set out here. This was a nice breakout here. Didn't hold on for very long and continued lower. Now, VKTX, I can see why this is getting kind of exciting because you're starting to see this curl here, and it very well could push up from here. It very well could. For me personally, I just keep seeing new higher lows. So new higher low, new higher low. This could be the next new higher low. I don't know. What I rather see is new lower highs before I start looking at buying something. So if the healthcare starts to turn around, if biotech starts to turn around, VKTX could very well turn around as well with it. But for me right now, I don't really care for it. It's trending down. It's not trending up like it used to. So I'll have to wait and give it time. But it might be right for you. Let's see what else we got. Sergio says, gotcha. Wish you well, brother. Hell yeah, Sergio. Same with you. Thanks for stopping in. He said, Dan Bob says, I'll sell unless she rips in the morning. I see. You're not a fair weather trader. It better be going up or you're going to sell it. And I agree with you. B. Stewie from the Walleyes game says TPB. TPB, baby. Let's take a look at TPB as this thing is Turning Point Brands. Let's see what this is. Consumer non-durable tobacco. What? You want to bet on tobacco, bro? It looks like they're doing really well. Let's see. Turning Point Brands engages in manufacturing, marketing, and distributing branded consumer products, including alternative smoking accessories and consumables with active ingredients. It operates through the following segments: Zigzag Products, Stoker Products, and Creative Distribution Solutions. The Zigzag Products sediment marks and distributes rolling papers, tubes, finished cigars, and MYO cigar wraps. So I can see why our good friend B. Stewie has sent us this. But as you guys can see, a beautiful cup with handle now. TBS is looking really good. I do want to put this on our watch list here so I can go over it a little bit deeper. Let's see. I want to see. So it looks like we're starting to get some EPS, but this must be a newer, yeah, so this is a newer IPO, guys. So that's even nicer to see a newer IPO in this. No. Hang on. TPB. Excuse me. I was gonna say I thought it looked better than that. I got it all. TPB. There we no TPB. Man, I got butterfingers today. Okay, so we went from a tobacco brand to a food brand, and I thought to myself, what is going on? Because the ticker didn't even look the same. But yeah, this TPB riding this 10-day moving average looking really good. I like this area right here. TPB, I'm going to set my alert. So there are very few stocks out there that I really care for. This one is looking very good because there's a lot of broken stocks now, guys. There's a lot of broken stocks out there, but this TPB is looking one of the better ones. It also has a nice little EPS here, 27%, and sales is starting to grow. So that's a really good sign, and it's definitely one that we want to keep on our watch list because something like this can even continue higher. Usually stocks that continue higher. Okay, so keep that in mind. TPB, new all-time highs, blue skies above this area. So I'd like to see it continue, absolutely. Bitcoin taking a massive dump. Oh no. Let's see here. Let's take a look at Bitcoin. I want to see what this massive dump is, and we'll come back. That's not a massive dump. We're still above its previous higher low of 93,468. Everything's just fine for now, anyway. Momentum Masters. Let's look at your Tesla. Yeah, it's definitely failing. Yeah, we knew we had some issues when it broke its new higher low. So that's why these are so important. We have this right here as a new higher low. We have this as a new higher low, and this as a new higher low. When it broke its new higher low right here on this day, we knew that there was issues because when you break a higher low, that shows that there's nobody there to help support that buying area. So when you break these areas, then they act as resistance, as you can see happened again here. So yes, I will eat your shorts, but I hope you made money regardless. Oh, does it have earnings? So B. Stewie says TPB has earnings Wednesday, so we'll see how that comes up. Endless Possibilities says true. I don't know if you're talking about a ticker or if you're just true in something I said. No, you wouldn't be talking about this. You wouldn't be calling this ticker symbol out. I know that you wouldn't because this is... Now, so I can see why if you really were calling true out, I can see why this might interest you. Because right here, you got a triple bottom, right? You got a triple bottom. It might pop up from here. It just might, but personally, that's not my type of trade. Below a 200-day moving average and not creating new higher lows, creating new lower lows is a bad sign for any ticker in my personal opinion. Let's see what else we got here. Oh, we're almost to the end, guys. So if you guys don't have anything and I make it to the end, we're going to call it a night. So I hope you guys are enjoying it. Make sure you hit that like, hit that subscribe button. We're going to end the poll right now. As we had, let's see, 25 votes, 40% of you say more sideways choppy action to come for the S&P 500. 31% say the SPY will rebound from this pullback, and 20% say heading lower, red, red, red. 7% say new higher lows. If it holds, then we good. Let's continue on here. We got a few more. HIMX. So let's take a look at HIMX. HIMX, so this thing did have a very nice pullback. This is the daily time frame, and you got to give it to HIMX as it's holding all of its moving averages and holding the 10-day moving average. So that's actually a really, really good sign for HIMX. This is a semiconductor, and it is doing very well. Now, it does have some overhead resistance back here from 2021 if it still holds as resistance, which it looks like it might as we had this gap up and then it sold right off at 14. You can see 14 is a very highly traded area, but as it creates new higher lows and the earnings continues to grow as well as its sales, I could see this thing being a nice one for the very near future. I'm going to add, HIMX on our leaderboard watch list as I will do more homework in the very near future. So thank you for that, Jeff Rosenberger. Let's see. I think you jumped over mine. I may have jumped over yours. I may have. Sometimes I do that. Let's see. Wouldn't the new variant of COVID in China cause uptick on mRNA? Yeah, it would, but I don't think we're going to see, a bunch of people jumping on this COVID vaccination thing, and it might cause an uptick. But if you're looking for a catalyst because of new coronavirus popping up, you're going to see what we would consider an episodic pivot or an EP, where it's going to gap way up and then it's going to continue higher. That would be an episodic pivot. But when you get, coronavirus news or some kind of virus news and you only get this cute little uptick here, like it's literally, let's put this in perspective here. This stock has came down 467%, okay? And off of its lowest, it's moved up as high as 24%, okay? So when you look at it on that perspective, it's not doing anything. Like, it's really not doing anything, okay? So yes, it very well could pop up into that area. Endless says, no, true to what you said. I'll make the sentence next time. No, but hey, you never know. Endless possibilities. You might be pulling out true. You might be wanting to play that triple bottom true. So Jeff Rosenberg's said, we got to Jeff Rosenberg. CNVS, B. Stewie says. Let's zoom out and take a little peeky gander at this. Oh, now that looks nice. With an RS rating of 98, I'm not even going to go too deep into this. We're going to add CNVS to our leaderboard list. I'll do a little look-see a little later, but you can see a beautiful cup with handle. It's getting tight above a 21-day moving average with EPS and sales growth. That's exactly what we like to see when we're looking to be a swing trader, a short-time investor in this. The quarterly earnings really did a number on the EPS. So CNVS, I wonder what these folks do. Let's read a little bit about them. As Ceniverse Corp is a global streaming technology and entertainment company. It owns and operates streaming channels, all powered by its advanced proprietary technology platform. The firm currently features enthusiast brands for subscriptions, video on demand, advertising-based video on demand, and free ad-supported streaming television channels. It entertains consumers around the globe by providing premium feature films and television series. So it's just another one of these streaming services. CNVS looks like they're doing really well, and they're making some money while they're doing it. So that's a very, very good sign. I like CNVS. We're going to keep this on our ticker watch list for the leaders. Jeff Rosenberg said, had to ask about FTNT and Amazon. Yeah, let's take a look at those. So I remember seeing FTNT not too long ago. It was making moves as we had a basing breakout right here, but we had earnings coming up. So it's still holding up really, really well. This is technology service and information technology services. They have beautiful growth. They have very good annual growth. This is definitely one that we want to make sure we keep on our leaderboards here. It's just continuing to grow. And I would have to say, out of all the stocks that we looked, there are very few that are holding out this well. Still right up there at that 10-day moving average. So you have to like FTNT. I don't give a crap who you are. The way the annual growth earnings are, this beautiful net margin curve that you see down here annually and quarterly, that is a really good sign. That's that NVIDIA kind of curve that I talk about all the time when you want to see earnings. And you can see here, it is trending. It is trending higher. It's continuing to trend. It's above that $100, that psychological area. It couldn't break through, and then it finally broke through. That's exactly what it did, folks. And you can see it here. It's still trading above that at $110. Very strong. And thank you for bringing that up, Jeff. FTNT, it'll definitely be on the leaderboards from now on. I don't know how I missed that, so good call. AMZN, as you can see here, we're below a 50-day moving average, and we're breaking that new higher low. So that's not the best sign, as we have, new higher lows all throughout here, constantly making new higher lows. Now this right here just approached that new higher low. That's not a good sign. That's not what you want to see when you're trending higher. You don't want to see it break this trend, break a new higher low. It shows that there's weakness and there's nobody here to support it, okay? Now, they have awesome EPS and sales growth, but that sales growth is starting to decline quarterly over quarterly. So keep that in mind as well. That's never a good sign for AMZN. Now, could it turn around here, double bottom, and rip tater chip? You're darn tootin'. It sure as hell could. I don't have a crystal ball, so we have to play this day by day. We have to see, does it bounce? Does it create a new higher low? Are the bulls still in control, or are the bears going to take those suckers down? Okay. Let's see. Jeff, we got FTNT and Amazon. Possibilities. Yes, sir. No true ticket. Lock Dr. Fell. Left to dinner with the kiddo and missed hymns. I'll go back and watch it after. Yeah, no, I mean, we can look at hymns since you're here. But yeah, we're still above a 21-day moving average. When you look at hymns, you're looking at a leader, okay? This is what leaders do sometimes. They rip tater chip, and it gets so extended from that 10-day moving average, it needs to pull back. So this is a huge move. We just have to give this plenty of time. So if I had to look at hymns, I would look at it doing something like this, where it's just going to trade sideways for a while, get tighter and tighter and tighter until we have another area where we can base our conviction off of, whether it's a cup and a handle, whether it's a basing breakout or a trend breakout. We will be there to see the equilibrium tighten up after expansion. We will be there. We are going to make some money off of hymns, but right now it's just chopping around. We're going to keep it on our leaderboards though, because we don't want to miss this next possible opportunity. VFC, B. Stewie says. So VFC is still making new higher lows. It looks like it's starting to show some EPS growth, but still no sales growth, which is not a very good sign. So on a financial standpoint, I'm going to be hands off of VFC, but you can see on a technical pattern, you can see new higher lows. It's trending north. That's a good sign for this ticker, and it looks like it's finally getting out of this stage 3 and stage 4 and entering a stage 2. So this might be a new stage 2 uptrend, and with some money coming in, maybe some soon to be influx of money for that might do well. RXT also looking good down here. If it can get above this basing breakout area, that could be a very good sign as well. So I like RXT as well. Not so much the financials, just because they're not making money just yet, but still I like that basing area off this bottom. As it continues to get tighter and tighter here, RXT could really get to ripping right outside this area. So just keep that in mind. This $3 area, it just looks really interesting. So I'm going to mark this $3 area, and we're going to see what happens. If it breaks above that $3 area, we see volume on that 5-minute time frame. This rack space can get into outer space very, very soon. All right. All right. We're going to take, this is going to be the last one, VST Energy. Oh, VST. I got you. Dominion Energy. Dominion Energy. Oh, D. Okay. I gotcha. So Dominion Energy. So this might be one that we want to keep it on our watch list right here, guys, as Dominion Energy looks like it's creating a beautiful cup. It's already had its earnings, and if energy does start to turn around and start to rip in, this could be exiting a stage 3 or a stage 4 and entering a stage 2. This is also in utilities, which, if you guys remember, utilities is doing very, very well right now. And if we look at utilities, I'm sorry, not utilities. If we look at D on this here, we can see it's a slower mover. It only moves 2.3%. So like I was telling you guys, when you find utilities and you find that sector, it's a hot sector, and then next thing you know, you're trying to play utilities, you start to find that a lot of these utility stocks are a bit bigger and they move a little slower. So just keep that in mind. But yes, VST is another good one. This one moves much, much faster, as it moves 6.9% on an average daily range. But the thing with this is it has earnings coming up this next week. So do keep that in mind. Vistracorp, VST. We've been keeping a very close eye on VST, especially at this cup with handle. We really liked it and it did really well, but that DeepSeek did a number on VST as well as a lot of other stocks that are out there. B. Stewie has posted the link tree in the comments section below. And if you guys haven't already, look at my screen, please, and thank you. First of all, I want to tell each and every one of you out there, thank you so much for being a part of this community. You are making my dream, and I truly and honestly mean that. I've always wanted to have a show where I could be passionate and show what I love to do in front of you people, and that is stock market speculation, that is commentary, that is trading, that is just working with a community to get better at trading. So make sure you hit this like for me, hit that subscribe button. Let me refresh. We'll see how many likes we got up to tonight. And we're up to 17. Do me a favor, let's double that by the end of the week. If you're watching this at a later time, hit that like, hit that subscribe button. Thank you guys so much for making it this far in the show. Thank you guys. I much appreciate each and every one of you. And of course, if you stick with me, I will say goodbye to each and every one of you. I usher you out. If you've said a comment in the comment section, I will make sure to shout you out. Thank you guys so much. Much love. I hope you guys have an awesome week. And remember, I don't care how red the market is. You stay positive, folks, because it pays to be positive. Jolene Martina, thank you. I appreciate you being here. Dan Bob, you are awesome. Comment. Jimmy Bright, thank you. I appreciate you. Jolene, I hope you have a good night. Brendan Long, dude, I appreciate that, man. Brendan Long sends awesome stream. Thank you very much. Yosef, my man, thank you so much for stopping in. New Glenn, thank you so much. I appreciate you being here, brother. My Vietnamese friend. Thank you so much. B. Stewie, thank you, man. I appreciate you moderating for us and making sure everything's running smooth. Lock Dr. Fell, thank you so much for being here. Endless Possibilities, one of my favorite names in the chat, next to Momentum Masters, or Momentu Masters, I think is what it actually is. Jeff Rosenberg, thank you again for swinging on N. No E, bringing his whole crew with him. Thank you so much. I appreciate you. Sergio Martinez, thank you so much for stopping in and saying hello. And know the Discord's alive and well, baby. Alive and well. Stop in and say hi. Let's see. I don't want to miss anybody. Norman Conklin, as always, thank you so much for being a member. I greatly appreciate that. It makes me feel great that you are willing to trust me with your time and your energy. Let's see. Robert Tainch, as always, stopping in to say hello. Who else we got? Analez, oh man, I missed him. Analez, I hope you're still with us, and I hope that you enjoyed the show. Zamora, we didn't go over Zeta. I'm sorry. Ashraf, what's going on? It's good to see you. Smaid, thank you so much. Carl Burr. Man, Jimmy, we had a ton of people in here today. Thank you guys so much for making my dream come true. I hope you make a little bit of money, and I hope I give you a creative edge in the market. I hope you guys have an awesome weekend. Thank you guys so damn much. Nothing but love. Peace, guys.